What's up, guys? Last video, I'm sure we stopped here. Basically, it's been about the Monday, Tuesday, Wednesday, Thursday movement in the market, right? So, Monday manipulation move to grab liquidity a lot of times. The highs or the lows of the week form on Monday. Tuesday price accumulate more orders and continuation. You know, Wednesday reaccumulation, sometimes reversal based on the higher time frame structure. Thursday completes the movement that occurred on Wednesday, Friday distribution. So you see case 2 right now, you see it's a diagram showing the movement on Mondays. Most times on Monday, people don't trade because the market is trying to adjust now. So Tuesday's big movement, Wednesday is a downtrend, right? So in the uptrend with different movement. See, this is a lower low, lower high. This is a trap manipulation. Get me? So people think it's going up, but it goes down. Doesn't look like this in the charts, but just an example. Thursday, Friday, but on the chart, it doesn't look like this. So you see, Friday high, right? There's a Monday, Tuesday, right? This close of a week, can call it close of a candle as well. Take out the liquidity above here, you can call the algo. You get what I mean? The algo. Then drops down, right? Make a big movement because every time market takes out liquidity, it makes a big movement in the market. So it goes down, right? Then continue keep its accumulation, the market just accumulate, right? That's Wednesday, Thursday, Friday, another big movement in the market, you know. Say on Mondays, why price doing that? Because the algo needs more liquidity, more orders entering into the market. So Monday's accumulation. Tuesday manipulation, price grab Monday's highs plus Friday high. So the accumulation move happen on Tuesday. Wednesday plus Thursday continuation. Price just create a range to stack more orders. Friday continuation, low of the week, higher time frame cycle. You know, you have to know that there are two types of algo in the algo market, in the short term and algo in the long term. In the long term for algo, after it takes important liquidity and sets the orders hit targets, either short or long. This depends on the amount of liquidity that hit will. An example, we say algo target, right? Liquidity, the highest high of the last 40, 60, 90 days, right? The highest high on the last 20 days, right? After a 20-day reversal. So this movement take our liquidity down here. Get what I mean? So looking forward to take our liquidity up here in the movement in the market. As you can see, after the price gap with major liquidity and break, movement shift plus MS bullish movement shift. We go to the start of the Monday, February, and we see the last 20 to 40, 60 days. And we define the highest high of the last 20 days and the highest high on the last 40 days. This is our goal within target. After 20 days from the trap, there is a great possibility that the price will rise, will reverse, not necessarily after 20 days, and most of the time, after 20 days, maybe a little less, maybe a little more, but the average is 20 days, right? So average, so the highest high on the last 20 days, the highest high on the last 40 days is the algo reading target. So at least 20 days is a minimum target for it to happen. So the buy side liquidity pool, because we saw this liquidity above here last before this is after, right? So the last 20, 40, 60, 90 days, low is the same low. This is mean that a lot of liquidity here turns, right? So you see the liquidity market took out the liquidity above here, right? Always for confirmation. We have a bearish movement, momentum shift. So you can see our take liquidity above here. Now there's a bearish momentum shift. There's a bearish momentum shift. It's a bearish kind of bearish move, right? Use that the reversal has not happened after 20 days because it's not necessary. The price moves after taking important liquidity, confluence, a bearish momentum shift, right? So I'm just explaining these things because it's good to share with someone that would want to learn and benefit yourself, you know. So see 20 days, 40 days, 60 days, 90 days to the market, right? Right now the trap, the target hits on the same month. This make the price build liquidity. In this case, go to the higher time frame. So the liquidity price is built and where that is that in, you know. So higher time frames now try to give us a clear view, but sometimes you are confused on your chart. Basically, you have been too long on that same hour time frame. Into going higher time frame or lower time frame for better entry. Higher time frame give you overall view where the market is about to go. We're not sure, but we are like about to go. If you get what I mean, but probably there or not. But looking at this right now, see 20 day, 40 day, 60 day, get me. So see the market just move in a mad way, but not even mad way, but it's just showing how it is. You know, you can see liquidity here, price engineering liquidity and break structure. You know, money transfer. Exactly, because low protected money transfer. You know, this liquidity double bottom per se, per this week took out this double bottom, so it doesn't count anymore. But you can take a good entry from here if I was the one on this trade setup, if you get me. So just give us another entry here. Most traders might lose this entry, might lose this, you know, the buy side liquidity, get me. Market is just moving up because it's having wants to move up because look at the trend, trend uptrend. And also there's enough buyers in the market than sellers. If you can see, if you go down here, but there's not enough buyers, so the market just keep going up. So a change in direction and money becomes targeting. The BLS, the BSL, after it took all the SSL, change from the sell side price delivery to the buy side price delivery, you know. So high protected money transfer, liquidity. Money transfer is like taking money from the retail traders. Get me? But if you are very wise, you follow the money transfer. That's the banks when they're trying to enter the market. Or this is just manipulation. When you have a close of a week like this, it's a good entry, to enter the market. But not all of them, but most time when you see things like that, you can just know that price delivery change from bullish to bearish. You know, the buy side liquidity, the high protected, the money transfer, the money transfer, giving us perfect entries in the market. This week validated this week validated this week. But this is a liquidity giving us here. But this one was taken out, you know. So market was going down. So I go market structure. Market structure is a map that will help to understand and predict the next move, the next movement, and it will make you understand where you are. Are you in the correction or the continuation? So the higher time frame market structure is so important. The higher time frame market structure is so important. So you have to always go to the higher time frame whenever you're going doing something, It's very important. And you can see this. This is a daily time frame we are on. See the bearish trend, right? So if you can just find a trend and take it, it's gonna be a good way. And see this close of a week, close of a week, close of a week, close of a week. Give us a perfect entries in the market. So as here, you know what I mean? It's a downtrend, bearish trend. Why should I even take entries from down here? What's the point? And I just take it from up here because it's going down. That's less risk, you know. And a bullish trend. And I just take it from down here, down here, and down here because taking it from here is just probably if you're a scalper, But if a swing trader, you can take it from down here, bearish trend, bullish trend, you know. Alright, structure is that simple actually. When you see a structure like this, it means there is no liquidity. The price has not taken much liquidity. If there's no liquidity, the price builds up liquidity that is sees across ranges, and the price manipulation is very large. Enough, and this makes the price rise slowly, makes reading the structure easy for you. But at the same time, a trend like this engineering liquidity for the future. It builds liquidity to see refuge in the future and wipe it all. Get what I'm saying? It builds liquidity to seek refuge in the future and wipe it all. Like for example, builds liquidity, builds liquidity, builds liquidity, builds liquidity, you know. A build up liquidity, higher time frame, liquidity, it's not liquidity. This is just liquidity. I am not all. Why? Because this is low fail to go to a discount price. If you get what I mean. So it's a downtrend. I want to buy in a discount price. I'm not buying a premium price. If you know what I mean. is a strong low, higher low. So guys, I'm gonna stop this video today. I will continue some other time.